taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and modular.
Okay, ladies and gents, have we got some sound now? The ghost has hopefully popped into the background to fix that. Any confirmation? Can we hear me now? Thankfully, I haven't been jabbering on for too long to myself. Audio is back, brilliant. I don't know what he did, but he popped in for a few seconds and it's on. So I'm guessing maybe just stitched me up a little bit. But good lad, Cuba. So guys, anyway, we're going to kind of have our eyes on Bitcoin. Obviously, everything else is aligned. Exactly. Big claps. Let's get some big claps for the ghost in the machine in the background as well. And thanks everyone for the confirmation. Apologies about the lack of sound. Obviously, I don't have a clue why, but our wonderful technical man in the background has sorted that out for us. So first thing I'm going to do is I'm just going to get rid of all of this for a moment because we discussed a lot of this in the Bitcoin report yesterday. So let's just put this forward into here and we'll just mark that under daily and H4. And we're going to come back to that, right? And for me, the plan was really, really clear. I don't know how many of you, I know kind of all of the members and bits and pieces, most of them kind of read the Bitcoin reports, right? So for me, when we moved down onto those time frames, things were starting to get really clear. But even before that, we were looking for more downside here, right? So let's explore why that is. So on a weekly scale, we had this sweep, right? Now, the thing that I was keeping my eye on was the fair value gap that we had here, all right? So if we now pop this back on and then we put our weekly on, yeah, if we get rid of this, we can see quite rightly so, it's the same annotations that we've got on the chart, right? Just to show you guys, obviously, that, you know, these are the things that we look at week in and week out, because I understand not all of you are able to necessarily follow along on a weekly or necessarily daily basis. Now, the key thing here, right, let me just get rid of this. is that this has been inverted, okay? So what happens when we see an inversion on one of these? Well, the best way to think about it is your typical kind of support and resistance flip. So we move that to a FVGI to show it's been inverted, and that's on a weekly scale. So what does that mean? Well, it simply means that when we set these gaps, in this case, this is a bullish gap. We set the bullish gap, price takes external liquidity, rebalances the gap, and then moves again for external liquidity. Now, we didn't take this. What we did do, however, is we created external liquidity in the form of this high on the close of that candle. We then swept that. Then we're looking for price again to rebalance an inefficiency. These are our fair value gaps. We see price came down here, had an initial reaction, failed to close below it. Remember, at this time, and let me just do it in green so we can really kind of stand out for anybody that's maybe not familiar with this. So when we've taken the high here, our expectation is for price to come back down, find support at this gap, and then move higher. Now, our conditions are that if price closes below this, inverting it, violating it, right, it will turn from support here to resistance. So once we have this weekly close, then naturally we're looking for price to gravitate lower. And where is that? Well, our key target here on the weekly is this 56,697, which is the previous swing low that rebalanced this gap. Now, weekly time frame, people, remember that is the good thing. You're welcome, Craig. I hope it was thankfully no audio issues with that, and thank you, Joe, as well, for the confirmation. So what does it mean? Well, it means that when we're on a weekly scale, we need to appreciate that each one of these candles represents a week, right? So we need to really wait and be patient before we get those plays. Now, in terms of targets, obviously we're looking for swing highs, swing lows, and then we're looking for our gaps, fair value gaps, inefficiencies, right? But on a weekly scale, there is also a lot of liquidity resting below old weekly lows. Okay, so just as we drop down the time frames, I'm going to put them on there because these are ultimately what's drawing liquidity lower. So as we move on to a daily now, we can see, as we said, and unfortunately we got the price action. I say unfortunately, great for you if you're a London session trader, okay, which I used to be, not anymore. My focus is very, very firmly on the New York sessions, right? So the way that I set my days up is I focus to trade the European afternoons and early evenings rather than the London mornings. For me, for my systems trading indice markets, it works very well. But obviously, you can get those moves very early. You can get them across Asia. You can obviously get them in London very much so. And that's what we got today, which is what we're going to take a look at. So what were the real indications here? Well, obviously, look, we've opened the day today on a Monday with a bearish bias. So we're going to pop our arrow above that and say, okay, well, if this was our bearish bias here, we'll just do that in red so it stands out, then what are our targets? Well, once again, we want to identify those levels. And while this doesn't look similar here, we can see on a weekly scale, this was the weekly low here, and this was the weekly low there. So it gave us a really, really good target, okay? Simon, I'm not good. Cool. No worries, mate. So I'm recording. Any questions, come and grab me inside the nest, mate, or on Twitter, and we will get them sorted. So this is where we expect to see a reaction. So at the moment, would I be looking to actively short this? No, because we can see a reaction around this area here. Now, what would make me think the price is now going to come down and take out this? Well, we remember our high time frame bias. What I'm saying to myself here is, okay, well, if price really displaces below this, there's two areas that I'm really watching here. So we have this bullish gap. Again, I'll just do this in green so it stands out to anybody that's maybe new to these concepts. But these gaps here, when they're made with bullish candles, we expect them to be rebalanced and then price to continue on to the next swing high. Now, in a similar way, in a bearish nature, what we do is when we take a swing high, we look for price to then come down and rebalance a low. Okay, it works the same in a bearish fashion as well. So we've got our downside targets. What would make me think that we'd be going down lower, especially towards this low here? Well, if price comes down and closes below these lows, and especially below this daily fair value gap here, then I would see that again, we would then invert this gap, same way as we have done with this one. And what you can see here is this was a weekly inversion, but you can see here price drawing back up into that area. Look at it, right? Support, closes below, resistance. Now price is driving down further because prices are looking for liquidity above old highs, old lows, above old highs, below old lows, or within these inefficiencies, these fair value gaps. Now, we don't have that at the moment. You would need high conviction plays to chase this down. I would have happily been short this morning during London. What would have been our kind of extra confirmation for this? Well, it would have been this here. So I'm going to draw this across. So this is the last up close candle that we have here. So the up close candle here, price then changes its state of delivery here. All right. Now, while we're still over here, we have this bullish gap. When we're in bearish price delivery, or when we're delivering in bearish order flow, then we want to be more focused on this, the sell side of the curve, right? So we're looking for how price reacts. Now, change in state of delivery that we get here when price closes below the order block was a good indication when yesterday's price action closed. Bearing in mind, this is also a large bearish engulfing candle that also displaced below this low, right? So we had strong close, large body candle, all of these things indication that price action is looking to move lower. So now as we move on to the 4 hour, we're saying to ourselves, okay, well, how do we frame this? And what we can see here is that we had that initial big sell-off, Sunday evening through. We continued the sell-off during Asia, and then also here into London. So what we want to say now is, look, now isn't the time to short this. Here was the time to short this. People that are active in Asia, London, I'm sure, some people got some really, really nice positions there. However, what we want to be looking at, or what I want to be looking at, is how price reacts around here. Right, these are our key kind of liquidity pools. So if we see a strong reaction here, and this would obviously be on a lower time frame, but you want to see one of these levels swept, ideally both of them, then you want to see a strong recovery, right? That big impulse, something that's telling you that, the buyers have stepped in here, and, the technicalities around whether that term's correct or not when you're looking at liquidity, I don't really care about in truth. I care about the fact that if you're talking about buyers stepping in or sellers stepping in, it's a much easier way to kind of understand the rhythms and the flow of the market. Now, if you want to do deep liquidity theory, study bits and pieces, obviously things like ICT and, Trader SC people I couldn't recommend enough, that's fine. But I still think that if you're considering it like this, look, if the buying pressure is strong enough here, or if there's enough people willing to take these bids, then these are the areas you're going to see recoveries. The danger about shorting into these areas here is you have a really bad risk to reward, right? Because you want to be shorting here where your target's here. Well, where's your risk? Where's your stop loss? It's up here somewhere, right? Maybe up here, which means you would have a terrible risk to reward. So that's what I'm kind of looking at here on Bitcoin. Now, to just kind of break this down a little bit further. Right, looking at this here now, this red box represents Asia's range, okay? So quite often you see, as you look back on these areas represent, consolidations. Very, very occasionally you get really big runs during Asia, like we do here. So you see, compared to the other boxes, look at the size of this. And then after that, look how compressed the price action is. We'll just do it in just a random color so it stands out. Look how compressed the price action is, or it can be. So we need to really remember that. So when we see a nice consolidation from Asia, and we did have a bit of a sell-off, as we can see here, so we want to take that into account. We're then looking to see what price does in London. And in London, we can see we got that initial dip. Price has kind of climbed back up, and then right at the close here, we started to get that sell-off. So now it makes sense to me that in between the sessions, we've got maybe an hour and 15 minutes before the pre-market of the New York session, that we want to be monitoring these areas for a recovery. If we start seeing price really move aggressively through it without seeing any kind of strong reaction, then I think, we could be in for a little bit more downside here on crypto. So something else I just want to cover with you guys as well is just looking at, traditional markets. And what I mean by that is equity markets and the dollar. But before we kind of look at those, I want to just share with you guys, so we just look at our economic calendar as well, okay? So we're in a new week now. Let me just get this fired up and I'll share it across with you all. Right, so what does this mean? Well, quite simply, these red folder news events tend to have a large impact on the markets, right? Typically I'm watching indices, so your S&P 500, your NASDAQ, your Dow Jones, and the mini contracts of those. And then that kind of effect they have on the market combined with looking at things like the dollar index to see, there's the dollar index, crypto, risk, etc. They fluctuate in and out of correlation, right? But for me, it's looking at it as a signature of where the market is willing to place its risk, right? Or what its risk appetite is. So One thing we're always looking for here are key US news events, and we can see that actually we've got a really clear run up here. We've got consumer confidence tomorrow, all right, which is at 3 p.m., which means that we get a nice start in the day. We do have like Canadian CPI and bits and pieces. I don't expect the impact for that to be as large, but Thursday here we can see that we have some big claims here. We've got final GDP Q on Q. That can have a big effect. We can see previously 1.3, now forecasting it for 1.4. That figure comes in a little bit lower. That can have a negative effect on the markets. And we also have unemployment claims. And we saw recently how they can move the market as well. So again, it's all about looking at the strength of the economy, how many people are in work, out of work, and what people are paying, right? So, the consumer price index, for example, is talking about the affordability that people have to live. And typically the higher the living cost, the less disposable income people have. We're battling inflation at the moment, interest rates, etc. The fact that the US chose to fix, the UK did the same, but the ECB dropped, was a really, really kind of interesting dynamic. It shows that Europe seems to be a little bit more comfortable with getting that rate cut out there early when compared to the US and to the UK, who are playing their hands a bit more cautiously. So we want to keep an eye on those. And then we've got revised consumer sentiment here as well on Friday, as well as core PCE price index. So that is kind of loading the latter part of the week up. So when we don't have red folder news, sometimes that kind of lack of volatility can leave the markets a bit flat. But that's from a traditional market look, really. When we're looking at that, recently, we've seen some kind of good moves from crypto in this space. So we want to kind of keep an eye on that, but at the same time, we don't want to let that kind of influence our thought too much. So Berg, Cardano is actually showing some strength here. Awesome. All right, well, let's take a look at that. Awesomeistic. Hello, mate. How are you doing? So Craig, related to the economic calendar, let's pop this question up here. Do you look at options closeouts? Are they on Friday too with PCE? Yeah, absolutely. I think the key thing for me is your options contracts are key. So, key, they're definitely something that can move the market, right? Because when those expiries come in, then obviously you can see big floods coming through. The other thing as well is earnings, right? But you just would use sort of something like Forex Factory for your kind of economic calendar, and then I would look at the earnings as they kind of come in. Obviously, with TradingView as well. Right, you can see on here, if we go back to, say, NASDAQ contract, all right, you will get your kind of news events and bits and pieces that will come in down here. So you can click this, you got your news updates, right? But then when it comes through and you have things like, you have your earnings season come in, you have all of that, then you normally get a little alert down here as well. I know certainly when you're looking at things like Forex, you see all of these symbols down here, yeah? Then it tells you when you have consumer confidence coming in, GDP growth rate, etc. Things that are expected to kind of move the needle. However, you can just use websites and bits and pieces that kind of lay that out for you as well. And that's often I prefer to kind of do that because, things like the reason that NASDAQ and the S&P 500 give us such good insight into crypto markets is because they're very laden with technology stocks, especially the NASDAQ, right? Now, NASDAQ and ES are often very, very correlated, if not almost entirely, but it is a good kind of precursor for what people's risk appetite is. And, the issue you have with that sometimes is you have these big companies like the NASDAQ at the moment, you've got a handful of companies like NVIDIA, for example, who are really kind of keeping that whole index up, all right, because, they're so strong. So the risk is if that starts to turn, what does that look like? So if we look at, say, the NASDAQ, if we look at like the NQ1 contract here, we pop this out to a daily, we can see what we've been watching on this, right? So while this holds, we've still got this bullish gap here. Now you can see price has been really reluctant here. We dipped into it here, didn't close below it, dipped into it here again, didn't close below it again. And now we've got this day here that's kind of holding this up. Now we do have this kind of big gap down here, and these do really like to be filled. So obviously we've got the imbalance down there, but then if you're looking at this, this is basically a gigantic gap all the way down from here to here. So we can see that there really is a draw on liquidity lower. Now price doesn't have to do it, doesn't have to go down to that level, but it is something that we want to kind of consider and factor in. The other thing here is that after the close, and I'll just draw this one out a little bit further, we've now created a bearish gap above us, right? Now, what that does do, though, is that does give us some really, really good clarity here, because in the close of today, if we've closed below this, then I'm favoring more downside to this area down here to fill this inefficiency. However, if price recovers, closes above this, ultimately we then invert this exactly as we looked at before on Bitcoin, and then this area would then be looked to turn to support, right? So close above this here, we would look for something like this, some kind of pullback. It doesn't have to be exactly to this point, but you always want to be kind of looking to buy when the market's moving down, yeah? So you want to buy when there's blood in the water, and you want to sell when there's euphoria. Very simple thing to kind of say. Obviously, there's a lot more technically that goes into it than that. But, these runs that you get in crypto and in indices sometimes leave you very little space to get involved. So even though we're high here, we have to have parameters in place that say to us, okay, well, what if we do just continue to catch a bid here, right? When the NQ, for example, NASDAQ broke its all-time high, the way that I certainly look at the market with that, and the way that I've seen a lot of top traders look at the market in that respect, people that I've learned from over the years, is that you just keep longing this thing until it just breaks down on you. All right. And you can see here the day after day after day, small consolidation, massive pump. Now we're looking to see if this is the consolidation. And what we've done is given ourselves an opportunity here and a set of parameters that says if we close above this, then we're targeting this high because that's the next liquidity to the upside. Close below this, and then price is almost certainly looking deeper for internal liquidity, which are our gaps. So we look to the next viable gap that is lower. So to kind of finish ourselves up, or to kind of look at that, let's actually, saying that, E.R. Berg gave us a kind bit of information back there about ADA looking like it's really kind of catching a bid here. So let's see what we've got. Zoom ourselves out to the weekly, and let's just see where we can see this kind of reacting here. Now, actually, in similar fashion to Bitcoin, we can see we had this really large fair value gap here. And again, you'll see these on my charts typically if you watch the channel, or if you see any of my stuff on YouTube, for example, or on Twitter, you'll see these grey, whether they're like bullish or bearish, right? But the whole idea is I'm just doing them on this for people that maybe don't have that context. So what happened here? We've got this bullish gap here. What has it done? Supported price through here. Price has come in, supported it here. Even though this hasn't led to a bullish reaction, you can see that price has really struggled for a lot of weeks in this area, this large consolidation. Now, obviously, the thing to be aware of is that these consolidations often lead to, pretty powerful moves coming off the back of it. Consolidation into here, big pump up into here. All right, you can see it even in these smaller ones here. And then price takes off and obviously doesn't really give you much of a chance to get back in. However, this and the previous week, which closed below, was an indication of weakness, in my opinion, certainly. And then I'm saying to myself, okay, well, where's the next likely level for price? We have another bullish gap down here, but remembering we're on the weekly, there will be liquidity below these weekly lows, okay? So price has come in, and it's swept these two weekly lows here, and we've seen a minor reaction, but not really much. So as we look here, and we're going to get some more context here on the daily, we can see obviously price in a really, really strong downtrend here. Yeah, we kind of came into here, research again, external liquidity from these lows, price comes up, rebalances, this gap here continues downwards. Where to? From a gap, we're then looking for external liquidity. We then see the reaction here. Price then draws up to fill the inefficiency up here, sells off again. Now, on a daily scale here, actually, there's really not too much. We've had obviously consolidation over the weekend, Saturday, Sunday, Friday, Thursday, Wednesday as well. I think what E.R. Berg is alluding to here is that we had this really nice reaction down here. So whenever I see one of these, like what I would call an abnormal wick, I always like to mark it and then kind of say, okay, where did that come from? What's interesting is as soon as we look back, and one of the best people that I've learned from on this was Trader SC, looking at these kind of consolidations, yeah, and then looking at these points of mitigation, which again is something I studied under Michael, ICT. I recommend checking out all those guys as well. Of course, CryptoBird, who's been just a joy to work with for a number of years now, who's incredibly knowledgeable. CMT level 3. It's a chartered market technician. There's really not many of those around. But what we're looking for in this respect is this prior consolidation here. So if we just highlight this area, I'm just going to do it in orange so it stands out. Then this is what led to this massive pump higher, right? So this is where all the buyers accumulated, and anybody that was a seller in here was ultimately very, very wrong. So these provide really good areas of mitigation. What does that mean? Well, there were buyers in here before, maybe there's buyers in here again. So what would that mean to us? Well, this red line that we marked is where the key liquidity is resting under this low. So if we're saying that there were buyers here before, we want to see if the buyers are going to step in again, all right? So what would we look for here? Well, we would look for a sweep of key liquidity, yeah? We then want the high, this high here, that swept this low, yeah, closed above, and then we look for those pullbacks. Remember, we want to buy when the market's red, and then we can look for price to move higher. What I really like about this here is that we can see all of the liquidity that's stacking to the upside, all of these naked, untapped highs, yeah, and obviously keeps going up and up and up, provide these really, really good liquidity pools. So to give you an idea from the other side of the fence or from the other side of the curve, so the buy side of the curve, look what happened as we were moving up here. What are we doing? Well, first of all, we're attacking the liquidity that's resting here. Yeah, so that move up does that. But in its very nature, by doing that, it then leaves liquidity in its wake. And I'm not going to mark them all up, but you're definitely able to see the key ones. And then look, when price kind of takes out one of those highest points of liquidity, what does it do? Drops down to take liquidity from the lows, all right? And then ultimately, what you're doing is as you draw them across, obviously in much better lines than I am, actually do this properly so you guys can see it, and we'll do it slightly thicker. You can see here that price just goes to take out liquidity target after liquidity target after liquidity target. So this is what we're looking at here. And actually, it's quite nice that we've got, you know, a little bit of liquidity building to the upside. That does give me confidence that price could see a little bit of resurgence. However, we also need to be aware that when we lose these areas, or if we create bearish conditions within them, and by that I'm talking about these areas of mitigation, then that's when we can look for continuation, right? So I'm just going to get rid of this for a moment, and I'm going to highlight what happened back here. So you see this area of consolidation here, right? Let's just take it as that. Now look what happens. When we come back to this and the buyers fail to step in, look how we lose this. Look how we look at our kind of inversions, right? When you lose an area that should be support and you look to it for resistance, well, what you're looking for are bearish conditions within these, yeah? So what do we get? Price loses this area, an area that provided strong support last time. Why was that? Well, we were in a downtrend heading into this. This is the consolidation that led to this big pump. Price came up, retested this, and then flew. So when it came down and showed it no respect at all, you ask yourself the question of where have the buyers gone, okay? And it just means that the market wants liquidity lower down. So then when we do that, we tag our bearish points of interest. We come here, we have a bearish gap, price sells off. What then happens as we come into here? Well, we have a bearish gap in here, but we also have a bearish order block in here. Again, price reacting with those bearish points of interest within previous bullish consolidations, okay? So while we're down here, I'm not saying that the market is going to turn bullish, but what I am saying is you could take some conviction plays today into these lows. Do I think that they're going to get tagged? I mean, price looks very, very weak, and we could very easily be heading down for this, which is 0.3547. We go on to the 4 hour. Then what you want to say to yourself is, all right, well, what conditions do you want to see met in order to do that? Do I want to just start shorting here? The problem I've got if I just start shorting here is that my stop loss realistically has to be above this high here, or certainly above this order block. Then I need to target this low, and look, I have 0.77 risk to reward, right? However, if I was to say to myself, well, actually, I want to target price having a bearish reaction at this gap, so looking for price to actually come back from here to here, and then on the lower time frame saying to ourselves, okay, well, can we get a lower time frame entry from here? All of a sudden, we can see this changes the dynamic a lot. Okay, we've now gone from 0.7 risk to reward to a 2.29, and if we don't get the setup in here on the lower time frame, for example, we drop down to say 15-minute or a 5-minute to execute, and if price comes up to here, right, we'll set that high, sweep the high, price breaks down below that low, yeah, which is what we're looking for. This is obviously a bearish version of what we were discussing on the previous charts, except we were looking at the bullish case, meaning that we've swept a high, yeah, and then the low that was responsible for taking that high gets closed below, and then we look for a return to this area here in order to go short, right? Like we would with this. So while we're looking for that in here, if we don't get that, yeah, then we simply don't trade it. If price comes up and we're looking for that reaction, but it keeps moving higher and it keeps taking the highs and we don't get that aggressive move lower, then we quite simply just stay out of our entries, right? That's why we're using the lower time frames to finesse those entries in and out. What I would actually look to here, if price continued to fall, is I would actually be looking at this area here to say, okay, is this the area that we get that sweep, that recovery, and then price looking to move higher again, all right? And this one would obviously be in a bullish nature. So in terms of that, how we're looking here on AD8, I think we could be coming into an area here where we see a sweep and a slight recovery. And it'd be really, really good to get some kind of confirmation on that as well. So just to finish up, I'm just going to take a very quick look at ETH. So having a look here, let's zoom out to our high time frame and see what we've had on there. Not really much has changed with this one in a lot of respects because we've been looking for this. We have this huge gap down here, all right? And look, prices come up again. I know I sound like a broken record here. Prices come out, swept the higher, yeah? So external liquidity has been taken. We made this lovely weekly gap here, all right, which is that daily gap as well, which you'll see when we move to the lower time frames. So we've just literally been looking for price to draw back down here. Now, the other thing that we've done here is added a Fibonacci, all right, and on this Fibonacci we have, let me just add some levels in for you guys. We're looking for price to correct to the lower 50% here, all right? And that's if you were looking at it in terms of ICT's teaching, you'd be looking at this as premium and discount, which makes a lot of sense and always has done to me, because you can understand from a risk to reward perspective, the algorithms, the bots, everything that kind of trade this market is, it makes sense to be long down here. Why? Because if you're long here and your risk is under here, just for example, and you're targeting this higher, you have a 1.86 risk to reward. You know, just semantics, okay? Now, if you're trying to long from up here, your risk is still down there, your reward is much less, and you have a 0.59 risk. It just means you have to have a much higher win rate. You know, if you long from down here, or even where price currently is a 1.5R, yeah, you don't need as high a win rate to be a profitable trader. So that's always a good way to look at it. Price doesn't have to always abide by that, but it very, very often does. So as we look here, yeah, let me just make that slightly less obtrusive. We look at this 50% line, price really did come in and respect that. Look how the body closed literally, you know, to the point on that. Now price has opened up and it's now showing weakness again, looking to move lower. I think one thing that I really did want to see here, like where we marked up the previous week's low. So this being the previous week's low, which we'll mark in here as well, which you'll just see as PWL. Now as we move on to the daily, we move this back so you can see it. We can see we've got the prior week's low here. Now this was the prior week's low here, right? So you see the red line, that was this week's low. So last week, commencing on the 17th of June, we saw price go down into here, right? Take out this low, and then we saw a bullish reaction. Doesn't look like much of a reaction, right? But in terms of trading this intraday, we swept this low here, and it gave us a really nice opportunity to take some long plays. Now, what is kind of a little bit more concerning here is we're not really seeing that reaction at the moment, but it is only Monday. So if we're looking for a bullish reaction here, what do we want to see? Well, we need to start seeing some strength, okay? And we've clearly not got anything here on the 4 hour. That's just looking very bearish. Our first kind of gap is up here. So then if we're moving this down to the hourly, all of a sudden we've got some context. So we're looking at this gap that we've got here, which is a bearish gap. So if my theory is that if price has a bullish reaction here and we're now in the lower 50% down below this dotted line, then price could look to gravitate higher. So do I want to just open bids here? Absolutely not. What I want to see is price close above this, again, get that little pullback, and then we can look to trade it higher. And what I'm saying to myself here is, where could price be going? Well, again, we've got these lovely collections of highs, and then we also have this nice big bearish gap here, and then the liquidity resting above here. So you can see how price can kind of gravitate a little bit higher up. So on the hourly here, this is brilliant. If I see this inverted, meaning we see it get closed above, then I would move down, look for something probably in and around the 5 minute. Let me see if I can give you an example of a bullish reversion we got. So this is a really good example here down in New York. We had this, we swept out a low, we have a bullish bias. Why? Because we're looking and we're sat here, yeah, just for example, this is prevalent if we're down below this for our current TA anyway. But here, it's really, really simple. We want to see that sweep, meaning we want to see some inducement. Price is inducing here. We then want to see price recover as we get here. And again, like I said, you can even do it as simple as this. You can look at the high. Yeah, you look at the high that swept the low, close above that high. Yeah, and then you can take your entry there, or you could remove your entry down here. So place a limit order further across. You want to put your stops below the swing low, which is down here, or you could have actually chosen this swing low, which is on the line of this, which is perfectly valid. And then you would be targeting higher prices, all right? And that kind of targeting methodology would be up to you and your system. But that's the kind of idea on what we would be looking for in terms of setups. So just to kind of close this off, Do you know what? You're very welcome. It's BC Richfield here today, ER Berg, on behalf of the Berg Nest, but I will definitely pass on your very best wishes to our dear friend Crypto Berg as well, and you're very welcome for the shout out. Now, Henry raises a good point here. So for a bit of fun, let's take a look. Or not fun. I don't mean it in that way. I know a lot of people have got portfolios that are bleeding out. I've chosen to hold through a lot of coins as well, especially kind of AI narratives and projects I really like Blender, Creditify, exactly, for example. Those kind of ones, you're just taking the hits on. We'll just continue adding lower down. Even if we don't get the resurgence in it this time around, I think they're good projects to hold, and that's on me. However, I do appreciate, as we look at some of these, that people have obviously got some projects that are really kind of getting hurt at the moment. So let's look at our perpetual contract here for Beam, shall we? Just to finish up on this one. Trade to Prosper. Hello, mate. Good to hear from you. So, all right, weekly, we move back. What have we got? Again, looking for key highs, lows, bits that can be capping price, and I really like this here. I'm going to leave that as a thicker line. Why? Because there's a nice kind of swing low here. This was the kind of point that price really started to take off, kind of in a little bit of a quandary, because like we've seen on a lot of the alts, we've done this, meaning we've inverted this. And again, look, I know it wasn't the longest distance, but when we closed below here, and I know I sound like a broken record, but what does our next target become? It becomes this low, right? This low that was down here at 0.0115400. Now, while that doesn't look that useful now, when we move to the daily, we say, okay, well, this was the day that we're looking to kind of move down. Again, I'm in that kind of situation where I'm looking for a bullish reaction here rather than a bearish one whilst we hold this level. Now, moving down even further, okay, and looking at the beginning of the day today, quite simply, you know, we would have been looking for any reason and excuse within here to get short down to this level, but now it's just a little bit too dangerous. So as we look at this moving forward, we take that level, we move it left, and we say, right, what's price reacting from here? We see that price really kind of steps into quite a big void, right, until we kind of get down to this level down here. Look at this gigantic wick. Now, when you see a large wick like this, you can look to kind of take the 50% of it, for example, to see kind of rules of consequent encroachment. But ultimately, if we fail to hold this level and we get down here and we start establishing ourselves down here, and what does that look like? Well, it would look something like this. We would want to see a strong close below here. And within that strong close lower, you would want to see some kind of bearish gap as well. Because that way, what we can do is wait for price to come back to that area here. And again, if the sellers are really ready to keep shorting this lower, then we've got our targets made down here, we can look for those setups. However, if price isn't ready to do that, it violates it and closes above, we're equally prepared, yeah? And then we can see this becomes inverted, and all of a sudden we say, okay, now we're looking for a resurgence. Where can we target? Well, quite simply, we can target the prior highs and gaps that are above us. But yeah, absolutely, couldn't agree more, Henry. I think a lot of these are just getting pretty obliterated at the moment, which is natural. But whenever this happens to the markets, you know, you've got to say to yourself, is this the right place to short this when you've had all of this downside? Because typically what happens is, you know, the majority end up getting in short down here, all right? When really your kind of major players, smart money, whatever you would want to call them, institutional sellers in this case rather than buyers, are people that are involved up here. So their positions are pretty secure up there, right? They've got a long way to go down. They know where their risk is. The problem is people start jumping on the bandwagon. You hear the term retail used a lot, and price purging into these levels. The people that are going short here, quite often you see something like this, wipes out all of the leverage, will come into some kind of key gap, yeah, like we have here. Everybody started to get bullish here. What happens is we deviate this, step back beneath, and then continue the sell-off. All right, so that's what I would be cautious of here, which is why at the moment I'm really kind of just looking towards my intraday setups. All right, guys. So look, we're going to put a pin in it there. What have we got on the clock for today? I think that was a good session. I think just coming up to 40 minutes, which is ideal. Guys, if you haven't had a chance to watch this live today, then please do reach out to me. You can contact me through the Nest, or you can come and grab me on Twitter at BC_Richfield. And for everybody that's watched this live today, I think we've got about 3,500 people watching, which is awesome. Just a big shout out to all of you. Really do appreciate you giving up your time to listen to me waffle on about my ideas on the charts. But please please do trade safe. You know, conditions are slightly treacherous at the moment. If you've got questions, if you're looking for trading education, if you're looking for exchanges to work with, you know, or to just work around some like-minded people, we have lots of options that start all the way from free. So please do go and check that out in the description below, and do come and join me over at Femex. Really, really bustling, vibrant community we're building over there with them on Pulse. And yeah, aside from that, guys, have a fantastic week ahead. Do trade safe. I look